welcome to our market outlook. First of all, let's start with a brief review. Domestic indices erased gains on profit booking amid a weak global news and disappointing November industrial production data, which was released on Friday. Even though Infosys estimates beating October-December earnings boosted information technology stocks, National Stock Exchange Nifty ended almost down of 17 points, ended at 5,951, which is 0.3% down from Thursday. Intraday, the index had a hit a low of 5,940 and a high of 6,018 levels. Sensex closed flat at 19,663. Turnover in the domestic cash market rose to 166 billion rupees from 157 billion rupees on Thursday. Volume in Infosys counter rose the most last day session on the company's better than expected October-December earnings and a higher 2012-13 April-March dollar revenue guidance. Infosys topped the Nifty with a 17% gain at 2,712 rupees. Volume on this counter on NSE alone was 11.6 million rupees, which is more than 11 times of its 6 months average volume. The unexpectedly strong results triggered buying in the rest of the IT counters. Shares in on those counters rose 50.5 to 6.6%. However, the IT stock was the only gainer in the Nifty when such other sectors like power, FMCG, banking declined sharply on profit booking. HDFC Bank, DLF, Tata Power, State Bank of India, ITC, Hindustan Unilever, and JP Associates fell 1 to 4%. The BSE mid cap and small cap indices also lost around 1.5% each. The broader market came under selling pressure after its recent rally. The profit booking also dragged down shares of public sector oil marketing companies. The expectation of a diesel price hike had driven the stocks up in the past two sessions. State-owned oil marketing companies fell 0.5 to 2.6%. ONGC fell 3.3% to 292 rupees on reports that a fire occurred in its Assam unit. Disappointing economic data added to the profit booking, which led a fall in the market. India's factory output growth contracted to 1.1% in November against expectation of 0.4% growth. The capital goods sector contracted to 7.7% in November as against a growth of 7.5% in October. The trade gap for the first 9 months of the current financial year rose to $147,000 billion from $137 billion in the same period last year. Considering the widening trade deficit, economists expect the current account deficit to stay around 5% of GDP in the financial year ending March, which is significantly above the RBI's comfort level of less than 2.5%. On this context, RBI on its part can cut the repo rate to boost the domestic growth and instill confidence among the foreign investors to ensure more capital inflows to the country. While the RBI has hinted at a repo rate cut in January-March series, a cut as early as January 29th will indicate that it has shifted to focus to the growth from inflation, which will boost the sentiment and improve the domestic investment fueling growth. Coming to today's outlook, the key indices are seen taking cues from the overseas market and companies' October-December earnings data. We have inflation data released today, which is keenly eyed in the today's market. India's headline inflation rate based on the wholesale price index is likely to remain unchanged from the last month figure of 7.2%. This inflation figure is important for the investors in the run up to the Reserve Bank of India's monetary policy review, which is scheduled on January 29th. Those expecting a core inflation to ease in December maintain their view that RBI would cut the repo rate by 25 basis points on January 29th. However, skepticism in the market regarding this rate cut may keep the bank shares under pressures and attain the National Stock Exchange Nifty given Nifty to further downside. Uh, so far, the market is taking crucial supports at 5,960 and 5,050 levels. So it is a good sign, and we can expect a recovery from this range if RBI comes with the positive move on its repo rate cut. And in today's trade, market is keenly watching result from TCS and some other companies like Vakranji Software, Muthoot Finance is announcing its result. So all this action will keep those counties stock specific and volatile. So one should watch all this data and all this announcement and trade with the caution. So that's all from my side. Thank you. Have a nice trading day too.